Hello and welcome to the Weekly Watch podcast series. I'm Jim McCormick, Global Head of Desk Strategy at NatWest Markets. This series helps you cut through the noise in global financial markets with a quick take on the upcoming trends to watch. Despite a lot of grim headlines, there was some good news on COVID last week. The main story, of course, was Pfizer's announcement of its successful vaccine trial. The results were very positive and opened the door for fast-track approval in the coming weeks. Moderna and AstraZeneca are also set to report results imminently, and taken together, we can realistically expect vaccine distribution to begin next month. There was also good news on COVID trends in Europe. As we have said in recent weeks, case trends were likely to peak in many countries in early to mid-November. That is now happening, including in France and the UK. We think Italy is the next to watch, where a peak in cases is now imminent. Looking back, I see two broad takeaways from Europe's second wave experience. Firstly, case peaks happened, with mobility restrictions less than half of what they were last spring. Secondly, the fatality trends have tended to be much lower. Both are encouraging, especially taken together with the news that we've had on the vaccine. The better COVID news did help markets, but I would say the impact was actually pretty muted. The biggest trends were in equity sectors, where we saw rotations into bank and energy stocks and out of technology. This sector rotation seemed sensible, and I would expect it to continue. The impact on broader markets was, I would argue, a little bit disappointing. My own thinking is a viable vaccine should help drive a new round of global curve steepening. We didn't get much of that last week, although there were factors pushing in the other direction. And either way, we still think the best steepening opportunity at the moment has shifted away from the US and into Europe. 4 reasons I'd highlight. Firstly, the relative COVID trends are shifting again. Just as European COVID cases are peaking, US cases are surging again. Second, fiscal policy is a near-term obstacle for a steeper US curve. Not only did we not get the Democratic blue wave we expected, but the White House and Senate both sounded lukewarm about any near-term fiscal support. In Europe, the fiscal news has been better. So last week, the EU made progress in moving its budget and recovery fund plans forward. On monetary policy, recent speeches by ECB key members indicated that a rate cut is unlikely next month. And finally, European steepeners just offer much better value. Whereas 30-year yields in the US are 60 to 70 basis points above their record lows, 30-year yields in Germany are still very close to those record lows. The biggest market moves last week came in Turkey, where the currency rallied 11% from record lows set just the week before. Markets now expect significant rate hikes, which makes this coming Wednesday's CBRT meeting a make-or-break moment for the currency. Consensus looks for close to 500 basis points of rate hikes. If the central bank can deliver, it should set the stage for the lira to stabilize. The weakness in Turkey has not been a big obstacle to broader EM strength, but stabilization would certainly help. And we continue to think that the outlook for emerging markets is much improved heading into next year. This week's calendar is busier than last. 4 things I would watch out for. Firstly, as mentioned, we could get another round of vaccine news from Moderna and/or AstraZeneca. In terms of data, we already got the October activity data from China overnight. The main message was the recovery continues and there is plenty of momentum from here. Our bullish Asian currency basket opened this morning at a 2.5-year high, and we remain very constructive on Asia more generally. In the UK, this is not quite a make or break week for Brexit, but the window is getting narrower and the talks are set to continue. We now put the probability of a Brexit deal at 70%, which is the highest in some time. This should be enough to keep sterling ticking higher, but we think the weak UK economy will limit any upside. And finally, we round out the advanced economy October inflation data this week with reports from both the UK and Canada. On the question of medium-run inflation risks, our economics team published an excellent analysis on the underlying sector trends of core CPI for 7 advanced economies. My main takeaway is we don't yet know what the longer-term impact of COVID will be on inflation. We still think the risks are certainly to the upside, although we may not know that for sure until sometime later in 2021. I hope you enjoyed this episode of the Weekly Watch, and please do subscribe to our channel to get future episodes. We also encourage you to explore more of our content on our website and social media channels. Speak to you again soon.